Are we heading towards a housing crash? Well, that is certainly the narrative that we're hearing from many people, including the media. Look, no one knows exactly what's going to happen, but we can look at facts, not opinions, and things that caused the last housing crash to at least prognosticate whether or not some huge housing crash is headed our way. First, there is certainly a different housing market right now compared to what we just had a couple months ago. Supply is actually at a 5-year high right now. Interest rates are up over 2.9% from this time last year. Demand is down and inflation is at a 40-year high. All of these dynamics certainly point to the housing market cooling off. The median sales price went down in May $2,000 to $480,000. So a 0.4% housing dip is certainly not something to ring in the alarms, but it is important to note that this is the first time the median sales price went down at all in more than 2 years, which I can tell you is not normal. Of course, there's no way to predict where the Las Vegas housing market will head in the upcoming months. Just because prices fell last month for the first time in a while does not mean they will automatically keep going down, but it certainly looks like the housing market is starting to cool off a little bit. We are also seeing many cancellations, price reductions, and houses staying on the market longer. Look, the last 2 years we experienced with housing was not normal, and I would assume that everyone knows that this could not continue to happen forever. So let's look at the main things that caused the last housing crash and compare them with what we're seeing today. Right now, we have more equity than we've ever had in the history of the United States. And in the previous housing crash, we had the most negative equity ever. That alone should be the main point here, as people were forced to sell or let homes go to foreclosure in the last housing crash. Certainly not something we're seeing right now. Yes, supply has certainly gone up, but it's getting to be a more balanced market right now and still weighted to being a seller's market. Last time we had thousands of more homes on the market with very little demand. And also, home builders have not even come close to keeping up to the housing demand over the last decade. In 2005, there were 20,589 permits, and in 2021, there were 12,902, which is the highest since 2005, and populations and households are up way more since then. So the main thing that has caused the last housing crash, in my opinion, were the toxic loan products that did not verify income, assets, that need an appraisal, and those no longer exist anymore, and everybody knows that. When you go to get a home loan today, well, you're gonna need to prove your income, assets, and credit scores are much higher than we previously had. And we can all probably agree we are heading into a recession, or in one right now. Most people would think a recession would certainly be something that would hurt the housing market. But besides the recession that was caused by the housing market, every other recession in the history of the United States saw the housing market stay the same or go up. The recession happening soon or now will also be a good thing for mortgage rates, as it will be one of the biggest factors on getting inflation down, which is exactly what is needed for rates to start going back down. Look, markets go up and down. What we're seeing right now is normal. The housing market, along with the stock market, had over a decade of going up, and now it's taking a breath, which is surely needed. Most experts, including economists from the Mortgage Bankers Association, National Association of Realtors, and Fannie Mae, they don't see a housing crash. What they do see is an end to the crazy appreciation levels we've seen the last 2 years, and things starting to normalize with 3 to 6% appreciation in the forthcoming years, not over 20%. The bottom line is we can only look at the numbers we're seeing right now to gauge where we're headed. Certainly things could change, but right now there's nothing indicating we're in towards some catastrophic housing crash again. Look, if you're trying to buy a home for your primary residence, you're gonna stay in there for 5 years, there's almost nothing to indicate that it's not gonna be worth more in 5 years than when you bought it. So again, I know rates are high, it's definitely giving cause for concern, but here's my advice. Marry the home, date the rate, rates will come down, and then you can refinance into those lower rates. Again, no crazy housing crash heading our way likely, but we'll keep you posted on the numbers as we see them Call us if you have any questions. Thanks a lot.